AP, Bangkok. As investors awaited the results of the U.S. midterm elections and a significant inflation data scheduled on Thursday, global markets were mostly weaker on Wednesday. In London, Paris, Frankfurt, and Tokyo, benchmarks decreased. Chinese equities fell as disappointing inflation data added to the mounting signs of waning demand in the second-largest economy in the world. American futures also fell. Republicans still had a chance to take control of Congress as votes were still being tallied nationwide. In spite of predictions that the party would suffer from inflation and President Joe Biden's dismal support ratings, Democrats surprised observers by winning some close races. Recently, stocks increased on speculation that Republicans might take over at least the House of Representatives. If investors anticipate greater corporate taxes and other policy changes, a surprise victory for the Democrats might shock the markets. Vote tally updates would probably last at least a few days. Early on Wednesday, the DAX in Germany had decreased by 0.8% to 13,584.82, and the CAC 40 in Paris had decreased by 0.5% to 6,412.25. The FTSE 100 in Britain dropped 0.3% to 7,281.54. Less than 0.3% of the S&P 500 and Dow Industrials futures were down. The Dow Jones Industrial Average increased 1% on Tuesday, while the S&P 500 increased 0.6% on Wall Street. Gaining 0.5%, the Nasdaq Composite. Following the government's announcement that consumer price inflation decreased from 2.8% in September to 2.1% in October, Chinese stocks fell. The Producer Pricing Index, PPI, entered deflationary zone for the 21st consecutive month, falling to minus 1.3% from 0.9% in October. This is an even clearer indication that the world's second-largest economy is deteriorating. According to Stephen Innes of SPI Asset Management, China inflation data portrayed a very grim picture, with PPI staying deflationary and CPI much worse than projected, pointing to declining demand. Shanghai Composite Index down 0.5% to 3,048.17, while Hong Kong's Hang Seng fell 1.2% to 16,358.52. The S&P ASX 200 in Australia increased by 0.6% to 6,999.30, while the Kospi in Seoul increased by 1.1% to 2,424.41. The Fed purposely slows the economy by increasing interest rates, which makes borrowing money more expensive. High rates can increase the likelihood of a recession while lowering stock and other investment prices. From practically zero in March, the Fed has already increased its benchmark overnight rate to a range of 3.75% to 4%, and more investors anticipate it will exceed 5% next year. If Thursday's number is softer than anticipated, the Fed may be able to ease up a little. The report is anticipated by economists to reflect a continued, albeit minor, deceleration from the summer's peak. But the opposite outcome can occur if the reading is worse than anticipated. The benchmark for global prices, Brent crude, dropped 21 cents to $95.15 a barrel in London. From 145.65 Japanese yen, the dollar decreased to 145.72 yen. The euro dropped from $1.0076 to $1.0059.